The US data points to keep an eye on today.
I mean, we've got continuous jobless claims, we've got initial jobless claims. They're probably not going to be as strong as last time. I mean, we had some very strong numbers. We had strong non-farm payrolls, remember. Yeah. We had non-farm payrolls come out 280k after, against an expectation of 226. We've seen that. That's, I think, as far as the economy goes, I think we can kind of take strong employment numbers as a given. We're at, unemployment at 5.5%, which is pretty close to that kind of full employment rate as far as the US goes, of what's generally accepted about this kind of 2.2, 2.3% level. So 5.2, 5.3% level is roughly where people kind of pin full employment. Is that
full employment?
Yeah, well, I mean, as far as people who want
textbooks, anyway.
Yeah. So I think, as we talk about the kind of this data-driven Fed, I think they've kind of it's taken as a given. We're going to keep having strong numbers. You remember a year ago when it was 180 was a big number. Now it's just taken as a given. We're going to have 200 plus every time,
right. And
you're going to see the same initial jobless, which kind of feeds through. We've got Jerome Powell speaking today. He spoke earlier this week, and then he's kind of a leaning hawk within the FOMC. He's a voting member. Obviously, he was picked over. Obama's first choice was MIT economist Peter Diamond, who was never going to get through. He was going to get rejected on the floor because he was more of a Keynesian leaning economist. But Powell's seen as the kind of conservative pick for Obama, and so he's kind of definitely on the hawkish side. And when he spoke on Tuesday, he was saying that we could see 2 rate hikes this year. He's saying that the stock market isn't really showing signs of a bubble. Yes, we do have strength there. It's not necessarily bubbly. But obviously, we've got these jobless numbers nailed down. We've seen strength in the labour markets, but the big issue is inflation numbers, and that's where I think that's what he's going to focus on. We're still not at that 2% target rate.
Right.
I think that's going to be the big focus. We've moved away from jobs now, and inflation is going to be the big one. Just how transitory is this period of low inflation?
Understood.